Stuff is getting really juicy now, right? We got China trade talks coming in next week. We had a really weird data with ISM services and manufacturing. We want to pay attention to what is going on. So that's why we have Tim Anderson here behind the scenes on a Friday. Tim, tell me, what is happening in this market?
Well, the market started the third quarter and the month of October with a very sharp 2.5-day sell-off. It made a very nice reversal on Thursday after being down 3.5%, 4% after the ISM services number came out on Thursday morning. But we like the fact that it rallied off the 200-day moving average very smartly, with the reality that the internals of the services sector report were not quite as bad as the headline, and even the headline at 52.8 still showed us in a contractionary mode, not in an expansionary mode, not in a contraction. Next week is going to be very interesting.
Why
well, because we have a light week for economic data. We will not be in earnings reporting mode yet. The market will be able to trade what they say pretty much on its own in terms of investors looking at the fundamentals and trying to see value and trying to also see technically if the market can continue to hold the very key 200-day moving average.
Which we
on
saw
both.
It bounce off of last week.
Yes, it bounced very nicely off it, and as it did in August and in September. And even though last week we had a very sharp sell-off for 2.5 days, it actually was not as sharp as a sell-off as we saw during the first week in August.
What about the U.S.-China trade negotiations?
Well, that is going to be probably the big deal next week for the market. Any messaging that we can get out of that in terms of maybe with China's economy slowing down, maybe a little bit more so than what the official reports say, and with the U.S. economy maybe showing some hiccups from some backup in global trade, as we've seen from some data this week, maybe both sides are a little bit more incentivized to make a deal than they have been over the last 6 months or so.
And I know this is something you've been watching. The yield curve is widening.
Yes, and actually that is a very important point, because where there were a lot of reports and people were very concerned about the negative yield curve that was in the market 4 to 6 weeks ago, that has really reversed itself and normalized, so to speak. In fact, even at the low point of the market on Wednesday, that spread on the 2-year note to the 10-year note had widened out to a positive 16 basis points. It doesn't sound like a lot, but it's the steepest that part of the curve has been since early August.